One day's profit can be another day's losses, right? A few down days in a row, and then it really gets ugly very quickly. That's what we saw in March, that's for sure. It's important to set your own limits on how much you're willing to lose. Bottom line, cut bait while the losses are small. So for more on this topic, let's welcome in Investors Advantage Corp President John Grace is with us. John, thanks for being with us. This is all about risk tolerance, right? When you have people come into your office and say they want to invest for the long term, what are some of the key questions that we should be asking ourselves that a pro like you asks your clients?
Well, it's a great question, Nicole, and I would say, what is the long term? For us, the first question is to answer that question. In other words, when do you want how much money to be there for you after your last paycheck that might last for the next 20 or 30 years? We're seeing a lot of day traders coming into the market, and I think it may be because they're frustrated. They can't gamble in Vegas. They can't go to the track, so they're putting the money in the stock market. And from what I can see, both at Ameritrade and E-Trade, there's been like 3 million new folks that have just come into the equation, mostly millennials. These are not investors. These are traders. They're looking for a pop. That's not an investor. So what I want to distinguish is between, playing the game, if you will. You always feel smart if you see a gain and dumb if you see a loss. But that's not the real deal here. The real deal is first figuring out how much money you need to make work optional on your time frame. And then number two, determine before you put your chips on the table and throw the dice, how much loss you can accept. Is it 8%? Is it 20%? Is it 50%? Make sure you do the math before you put the money on the line.
So, you really need to do this math. I mean, what do you think is reasonable? What should, when do you cut the losses? When do you take some profits?
It's a personal call. And if you are talking to a bunch of do-it-yourselfers, as I have some friends, and I ask them this question, under what conditions do you sell? And they look at me like I'm absolutely out of my mind. And I'm suggesting that, again, you decide that for yourself in advance. Maybe you keep the loss at 7% or 8%, because let's understand, the market could care less about what you think, how much you believe in a stock. It doesn't care one bit how wealthy you are, how big your ego is, and nobody likes taking losses. But as those losses, at 20%, what do we need? 25 to get back to even? At 30, I believe it's 50. If we get down to 50% as a loss, we need 100. And if it's a 60% loss, as some people saw in 2008, now we need 150% gain just to get back in the game. So that requires a Hail Mary pass. If we could have limited that loss back at 20, we wouldn't have to try and swing for the fences just to feel like I can afford to stick around and not blow my brains out, as we did see one trader do just recently.
Yeah, that was an unfortunate turn of events. Very sad situation there.